today are facing development challenges on a global scale.
Today, 40 out of 56 million deaths
are attributable
to non-communicable diseases
such as heart disease, stroke, chronic respiratory disease, and diabetes.
Over 800,000 people
die by suicide every year.
In the Philippines, 5 out of 10 families in 2017
were deprived of basic education.
Nang dahil sa kahirapan, maraming pamilya ang napipilitang pahintuin
sa pag-aaral ang kanilang mga anak.
In remote areas, public transportation is inaccessible.
Children have to cross rivers and climb hills
with their books and bags just to go to school.
Philippines ranked 3rd in the top 10 countries with the most natural disasters
for the years 2005 to 2014.
Driven by the goal to achieve sustainable future for all by 2030, the UN identified and adopted 17 Sustainable Development Goals, or SDGs, to address the global challenges we face. This can only be achieved through a collaborative effort of all countries and stakeholders.
Aligned with the ATRAM's mission to engage, inspire, and collaborate
to build a financially secure future,
we are committed to building that future where no one is left behind.
We have adopted 3 out of the 17 SDGs,
aiming to make a positive impact,
as well as ingraining more responsible
and sustainable business practices within ATRAM.
Good health and well-being ensures healthy lifestyle and promotes well-being for all ages. Quality education ensures inclusive and equitable quality education and promotes lifelong learning opportunities for all. Climate action takes urgent action to combat climate change and its adverse impacts. With these goals, a sustainable future is possible, a future where no one is left behind.
The time is now, more than ever, that we must work together
to achieve the global goals in ensuring healthy lives, improving access to education,
and fighting climate crisis.
We at ATRAM declare full support to the UN Sustainable Development Goals. Let's start today. Let's invest in a sustainable future together.
Invest to thrive. Invest together.
Good morning, everyone. I'd like to welcome you all to ATRAM's exclusive webinar interview series with some of the top business minds in the country. Today, we have invited the President and CEO of Bank of the Philippine Islands, or BPI, Mr. Bong Consing, to discuss leadership challenges in times of crisis, disruptions in the banking industry, and opportunities from digital transformation, financial inclusion, and even mergers and acquisition. Before we begin, I'd like to remind everyone that you may ask questions throughout the discussion by clicking on the Q&A button found below your screen. We will get to as many questions as we can at the end of the discussion. Additionally, I'd like to let you know that this webinar is being recorded and copies will be sent within the day, as well as posted on all of our social media pages. We will also be sending a short survey at the end of the webinar to get your valuable feedback, to ensure we keep making these webinar series relevant and useful for our audience. Now, to introduce today's moderator, as ATRAM's head of equities, he oversees the management of domestic equity portfolios, spearheads the development of ATRAM's equity investment process, and periodically shares the firm's outlook on the asset class. Today, he will be hosting the interview with Mr. Consing. Let me now hand over the mic to Mr. Julian Tarrobago.
Good morning, everyone. Thank you for joining us. Thank you, Reynald, for the introduction. And yes, happy to be here. Thank you for joining us during this very, very interesting period. So after 4 months of quarantine, our country now faces critical crossroads. We highlight the urgency of opening up the economy and increasing government's fiscal stimulus package. This scenario remains our base case, supporting a recovery of earnings in 2021 and a sustainable rebound for Philippine stocks in the next 12 months. So again, the next 12 months. Without lifting the GCQ, however, and a more substantial fiscal spending program, we also recognize that things may get progressively worse in the form of, hopefully not, but in the form of rising bankruptcies, corporate defaults, rising unemployment, and even social unrest. Given this swelling of uncertainty, we continue to limit investments or investment selection to undervalued, best-of-breed companies, distinguished by strong brands, an improving understanding of current challenges, and those companies that are acting decisively, not just to survive, but to position themselves to emerge stronger from the crisis. Aligned with this best-of-breed strategy, our main bet in the sector is Bank of the Philippine Islands, or BPI. And this is anchored on a thesis of high-quality management and lower relative risk compared to others, respectable digital growth strategy, which we think is very important and will be the next megatrend, or is the next megatrend, and meaningful upside potential in terms of the share price now trading at a significant discount to our estimated medium-term intrinsic value of about 85 pesos per share. That said, we are pleased and honored to have with us BPI's vision leader, President and CEO, Bong Consing. Before taking the helm of BPI, Bong thrived in international finance, in distinguished roles in global powerhouses such as JP Morgan, in investment banking, and the Rohatyn Group, which is private equity based, in a career that spans over 30 years. I won't say how much more than 30 years, Bong. So Bong is also the president of the Bankers Association of the Philippines. So there's no one better to give us a on the state of the banking industry right now. So I'd like to welcome to the podcast Cezar Bong Consing.
Good morning, June. Glad to be here.
Happy to have you here, Bong. Yes, so again, welcome to the podcast and congratulations on BPI's first half results, which I thought were pretty amazing, actually, especially considering the circumstances. I think everyone understands the challenge and that earnings will be just terrible for the first half. Sorry, am I allowed to say that? Corporate earnings will be terrible for the second quarter of 2020. I think that's the expectation given I mean, let's not kid ourselves. It's been a challenging second quarter. So for those who don't know, BPI last week just reported that first half income reached 11.7 billion. That's down only compared to last year, despite massive provisioning and the full lockdown starting March or early March 2020. So as an investor with BPI as one of my core investments, I felt pretty good about, relieved and pretty good about the results. But we can talk about that. We have a lot of time to talk about that later, Bong. I just wanted to ask you, how are you and how's the family in this age of quarantine?
We're good, June. I remember bumping into you in a basketball game a couple of years ago. I missed the sports. There's nothing to watch. After a while, you can only do so much replays.
That's true. But sports is back. The NBA bubble is starting, I think, next week. So that's something to look forward to. People don't have to rely on Netflix anymore if they need some numbing or whatever. But NBA is back, and I know you're a sports fan. I will never forget that conversation we had. You were seated in front of me. I think there was courtside with your wife, and you whispered to me, our team, which is Lasal, Animo, our team is playing 4 guards, and that told me that this guy knows his basketball. This guy is aware that basketball is going through a transformative phase from the typical 2 guard, 2 forward, 1 center lineup into practically a game that is positionless basketball, that everyone can guard anyone else, and that's great because this is we're here to talk about transformation, and but before we go into the get down to business, let's like in basketball, you warm up first. Let's do some warm ups. Is it okay? Are you game for some rapid fire questions? I have a very high tech timer here.
Sure.
Sorry about that. So we have a 24-second shot clock. If you're okay with it, are you game for that, Bong?
Sure.
So I'll say some terms and names, and you just say the first thing that pops into your mind, and over the 24-second shot clock. So let me know when to say go, and let's start. Yeah, we want to start. Okay. So I guess we can go. So, okay, bull or bear, Bong?
Bull.
In leadership, progress or perfection?
Progress.
BDO or Metrobank?
BDO.
Money, power, or fame?
Fame.
Fame. P. Shot clock's up, but I have three more if you don't mind. PNB, RCBC, or UCPB?
UCPB.
Branches or digital experience?
Digital.
Last, 3-point shot, the dunk, or a half-court heave?
Oh, the dunk. No question.
No question. Same here. I'd like to be able to dunk in the first place. So yeah.
I'll tell you, June, it was an eye-opener for me. I was in the very first game that featured imports in this country.
Wow.
Yeah, this was Mika. And I don't know whether people remember it. Mariwasa Honda, they brought in 4 imports led by Billy Robinson.
Wow.
And I was in the game in Rizal Memorial when the team walked in, and all the imports proceeded to dunk. And the crowd went crazy. And now you go to any UAAP game and everybody's dunking.
Ooh, yeah. In warm-ups, everyone's dunking. Even the guards are dunking.
Yeah.
That's awesome because that was actually another, going back to the term, the transformational theme. That was a transfer. I mean, when imports were introduced to Philippine basketball or started playing in Philippine basketball leagues, that was transformative because people saw there's a different way of playing.
Yeah.
You dunk the ball, that looks like fun.
And I remember Mariwasa brought in 4. And at one point in the game, they played all 4. And then the Mika changed the rules that you could only bring in, after that, you could only bring in 2, and you couldn't play more than 2 at a time. And then they changed it again so that you could only play 1. This was well before the PBA.
That's awesome. And maybe we can talk about also how the rules of the game, and I'm speaking in terms of the banking sector and the way people do their banking, how the rules of the game are actually changing. Are we witnessing a proverbial changing of the guard as well? But you mentioned that was during the early 80s, 70s, or 60s. I remember that was also a challenging period in our not just country's history but economic history. That was, I think, the early 80s, 84 or was it 83 was the debt moratorium crisis. And you were
I was already at BPI.
Yes, can you take us back, Bong, to 84? I mean, I think there was a Ninoy Aquino assassination. There was a war in the Middle East. Oil prices were surging, and the peso went from 5 pesos to 11 pesos. So pretty much a lot of anarchy outside. So how did you navigate through that, and were there any lessons?
June, if you look at really bad situations, really the worst situation I've seen was our own debt restructuring in 83, 84. And I remember all of a sudden, you woke up one day and the country barely had any reserves left. And because of that, the exchange rate really moved. And then one of the controls, the BSP that was then run by Jobo Fernandez, introduced Jobo bills. And you would see overnight rates going up to 40 or 50%. That was the worst I had seen. And I think in 83 or 84, one of those years, the GDP growth was a negative 7 or 8%. That was the absolute worst, certainly I've seen in my career. That was really bad. And the Philippines was not in the position it is in today, because very high interest rates, a very weak peso, and a very low credit rating. And soon after that, I think we were downgraded to I think, C, because we weren't paying our debts. We declared a moratorium. That was the worst, I'd say.
Well, thanks for that, Bong. So the situation was really bad, but compared to today, I talked about us being in a critical crossroad today. There's uncertainty, but thanks for mentioning that. We have a stable currency. Capital ratios are much higher. And what was the other one? The other thing you mentioned? Oh, interest rates are much lower.
Yeah,
much lower today. So
yeah, it's a big difference, June. On the one extreme, you had the debt restructuring crisis of the early 80s for us, and then and there we had almost no reserves and very high interest rates. Now what we have today, we have a crisis, but we have plenty of reserves. I think our reserves are almost at an all-time high, and interest rates are very, very low. And then somewhere in the middle, you have the Asian financial crisis, right? The Asian financial crisis, you had high interest rates, but nowhere close to B3. And our reserves were okay, but certainly not as high as now. And at that point, we're only double B. Now we're triple B plus. So it's really a big change. I mean, there is a crisis, but the basics right now are so much better.
That's so reassuring. Thank you for that, Bong. So since we're on the topic, let's maybe it's time to check in. Again, I mentioned you're the president of BPI. You're also the president of the Bankers Association of the Philippines. So no one better to give that check in on the state of the banking industry. So could you? I remember in your briefing last week, Bong, you mentioned that you're expecting as good the results were from BPI, you were expecting a super typhoon. I remember you saying that at the end. So please help us understand your assessment of the state of the Philippine banking industry today.
Well, in general, look, you've got to understand, June, 70 to 80% of bank loans, industry loans, are to corporates. And all kinds of corporates, mid-sized corporates, large-sized corporates. The bigger corporate you are, obviously, and the better access you have to capital, the better you're able to withstand what's going on right now. And the nice thing the central bank has done is they have kept interest rates so low that, as long as you can service the interest, banks are happy to reschedule because no banks wants to see their customers go past due. So they'll reschedule as long as the interest is being served and maybe a little principal is getting paid. But the corporates have that ability. A lot of the corporates have that ability. The people that don't really have that ability are a big segment of the consumers, right? Because if you lose your job, okay, it doesn't matter how low the interest rates are, you can't pay your loans, okay? So I think what will happen is you're going to see portfolio problems in the consumer books first, okay? And then you're going to see portfolio problems later in the corporate accounts as this thing gets longer and longer. Because after a while, the lack of demand will simply suppress sales, and it doesn't matter how low interest rates are. No? And that's quite different from what we saw in the debt restructuring. It's quite different from what we saw in the Asian financial crisis, or even the global financial crisis about 10 years ago.
Thank you for those insights, Bong. The BPI is not in the business of giving away money, like what you always say. So there's that delicate balance that needs to be struck. How do you balance protecting asset quality and at the same time keeping a strong long-term, nurturing a strong long-term relationship with your clients and borrowers? I mean, what's the philosophy behind that for BPI?
I think ultimately it's a question of character. If you know, it gives us great comfort when somebody comes to us and says, I'm stretched, I'm having a hard time, I'm really struggling, but trust me, I'll pay you. And if we have a sense of that, then we will bend over backwards. And I think other banks will do the same, right? The character in a crisis like this, character means more than almost any other thing, because you can have the resources And you could decide, I'm going to take advantage of the situation and, string my banks along. So character is everything here.
Thank you for that. Just to get a little bit technical, what do you have new simulations on the impact of the current state will be on asset quality?
Well,
non-performing loans.
I was in a meeting yesterday with some very senior government officials, and I told them I did not think our NPL rates would exceed 10% industry-wide. And that's a lot lower than the 18 or 19% that we saw in the Asian financial crisis at the turn of the century.
Right.
And it's a lot lower than the low 20%, 22, 23% NPLs that we saw in the debt restructuring. And the reason it's lower is because interest rates are a lot lower. And because debt capacity is a lot bigger.
Sure.
And because there's a lot more liquidity.
Sure.
So, theoretically, can it go to 20%? Yes, the NPLs can go to 20%. But I don't think they'll exceed 10% in this crisis.
Well, that's great to hear, because I think, was it the Indonesian leader? I think Jokowi mentioned 17 to 27% for Indo. So this is pretty assuring.
I'm thinking 10, but make no mistake about it, 10 is still a lot.
Yeah, absolutely.
It's still a lot.
I mean, we're coming from 2. So that's a lot, but it's not 30%.
I don't think so.
I'm good with 10. I'm good with 10.
Now, if interest rates were to go up 300 or 400 basis points, that 10% number is out the window. But remember, the BSP still has a lot of ammunition. Governor Diokno is just shown his willingness to use his ammo when he needs to. And if continuously lowering the interest rates is to maintain resiliency among borrowers, I think he might do that.
Thank you. Last question on asset quality. We've spent a lot of time on that already. What conditions do you look out for to determine if what you've provisioned for, your provisions, have been enough? Because you had a lot of provisions. Again, the first half numbers were pretty good, considering there was massive provisioning, at least in my opinion. What do you look at to determine if you need to provision some more? I mean,
we're basically asking ourselves, do we think NPLs will get to 4%, 6%, 10%? And then we provision for that. And we also tell ourselves we want to provision sooner rather than later. And that's important, June, because if you can take your hits early, if you can recognize losses earlier, then the earlier you'll be back trying to grow business again.
Right.
Okay? What you don't want is, you don't want a situation where you're trying to minimize losses, even if you know they're really losses, or you're minimizing pain. Better to take it up front so you can get back in the business of growing and lending and moving things along.
Sure. Thanks, Bong. Now let's shift from asset quality into tweaks in your business model or your strategy. Obviously, this disruption is this little thing called the COVID and the lockdowns. Mm-hmm. This disruption in the economy has it caused a shift or changes in your business model and strategy? Perhaps if I remember correctly, before this, BPI was focusing a lot of attention on mid-market positioning. How's that coming along, and Banco in particular, is that moving forward or?
Yeah. Well, the fact is, if there are a couple of tweaks, the first tweak, first and foremost, is we have to do more to accelerate our digitalization. Okay, that's first and foremost, and I think we are a bit ahead in terms of digital platform and digital channels. But if anything, this whole crisis has told us we better do more. We better do it faster. in order to really serve clients. That's number one. Number two, what this crisis is also telling us is the move to try to expand in the consumer space, the move to try to expand in the microfinance space is important. It is very important, but we ought to take a moment to take stock of what these portfolios look like, because these are the portfolios that are most susceptible in this crisis. Now, it's very interesting what our early results are showing us. Our early results are showing us that the moment the microfinanciers, the really small businesses, were able to start operating again in the lockdown, they were prepared to pay, they were prepared to borrow some more, they were prepared to get back into the game. And I look at that and I'm telling myself, wow, there's a lot of resiliency among these microfinance operators as long as they can operate. You know? There's probably more resiliency there than there is on the pure consumer space.
Wow.
Because the pure consumer space is very dependent on, do they have jobs? Are they getting paid?
Right, right. That's amazing because, of course, not knowing what we know right now, when the lockdown started, our initial estimation was that the typical micro SME would have about 2 months of liquidity before it really hits them and hits them hard. But from what you're saying, we're 4 months into the lockdown, but there's signal. Factor. People are actually paying. So I think that's an encouraging signal.
And June, don't get me wrong. It's not. I'm not saying there's no pain. There's plenty of pain. But we are on the microfinance side. We are releasing and we are collecting, and frankly, at levels that I had not expected.
Right, right. I was supposed to ask you something else, but since we're on the topic of resiliency, hey, BPI is the oldest ASEAN bank. You're like what, 169, 170 years old. You've obviously lived and thrived through multiple crises, financial, whatever crisis, political wars. What's the secret to resiliency, or to BPI's resiliency?
Steady, right? Sticking to basics. And the basics in banking are stay liquid, right? Stay liquid, make sure solvency is never at risk, and have pretty good credit underwriting. I mean, it's just stick to basics. I mean, I think when banks get into trouble, it's because they either have forgotten the basics or it's gotten too fancy. And anytime you have a crisis, what you see banks doing, especially the good banks, is they try to simplify, right? So if there are a lot of offsetting positions, you simplify those offsetting positions. If you've got some very fancy businesses, you cut down on fancy businesses. You try to take leverage down, etc., etc. These are all the basic stuff.
Thanks, Bong. With regard to tweaks, has this situation raised systemic, in your opinion, has it raised systemic risk for smaller banks? And does this present some opportunities for inorganic growth or acquisitions or what have you?
Well, there are some very, very good smaller banks, June. There's some very, very good smaller banks. But in general, smaller banks, because of their size, have a more limited portfolio spread, okay, and have more limited access to a wide swath of depositors. So that obviously raises the bar for a lot of smaller banks. Now, again, it's early to tell. I think in a crisis like this, the mid and larger size banks might be a little better positioned. But that doesn't mean you can't have some really good small banks out there.
Thanks, Bong. A few more questions on the tweaks to the business model, because we're trying to understand what you're seeing and how you're adjusting. Because for me, that's a big deal for investing in a company, especially during this time. With regard to security, how is BPI ring-fenced internal controls? Because you're growing and you're heading digital. I'm not sure if it's digital first, but digital. But how have you ring-fenced internal controls after you had a glitch in 2017? Could you give us an update on that? And
well, you might remember, Jude, the 2017 glitch was a result of human error. Because we had somebody basically bypass controls, and so what we simply did is we doubled down on controls. We limited the ability for that error to repeat itself. You have to create redundancies. You have to look at your processes. Here's the challenging thing for all companies and banks probably in particular. The whole move to digitalize is trying to make things easier for everybody. But while you try to make things easier for everybody, you also have to be careful that your controls are up to speed. And so that's what we've really tried to do. As you become more accessible, you have to make sure your controls are actually tighter and frankly more relevant to what you're trying to do.
Thank you, Bong. Before we go and look into opportunities which include inclusion and digital transformation, and your digital platform has held up quite nicely. We can talk about that a bit later. Lastly, I think a segue to that, to inclusion and digitalization is, what's your view? This is a capital allocation question. Is this the end of branch banking? What do you think of branch banking, and what do you think of having the branch experience via digital? And are you at some point reduce your branches? What's the thinking here?
I don't think it's the end of branch banking, June, but I think the balance will shift in favor of digital and technology. And if you look at BPI, we haven't been growing a lot of branches every year. Outside Banco, where we've grown 300 branches in 3 years. In both BPI and BPI Family Bank, the total growth of branches has been in the teens. Okay, it hasn't been much, and the reason it hasn't been much is we were looking at some of the other ASEAN countries, and what became very apparent is the moment you got to a certain branch penetration, the number of branches began to come down. And across ASEAN, it was in the order of 12 branches or 13 branches per 100,000 people, and the Philippines is doing something like 10. That was pre-COVID, pre-lockdown. Now, the moment the lockdown happens, and all of a sudden people are running to digital, all it simply does is it changes the bogey, right? You don't have to wait until you get to an industry-wide 13 or 14 branches per capita, for example, to see the shift away from branches into digital. And I think that is what is happening. And as you build out your digital capability, what you find yourself seeing is your branches have time to convert themselves from the usual run-of-the-mill branch banking operations to become more sales offices, to have more meaningful discussions with clients, because there is more branch capacity.
Sure, but you won't be expanding your bank network as much, and you haven't anyway. But
we haven't. We've been doing about 10 or 20 branches a year for the last 3 years.
Will that go down?
Yeah, we'll continue to put branches in places where we're not present or we really have to be, but we will continue to realign. So we'll continue to realign.
Okay, because some people just like to go to the branches, right? I mean, there's still people who want to go to the bank.
And that's true. That's true. Although I'll tell you, I'm amazed at the number of our clients who, were ordinarily would go to the branch every week, who during this lockdown decided to enroll in our digital channels. By the thousands every week is enrollment.
Okay, so I think that's a good segue into the next topic, which is digital transformation. Let's start with the basics. Bong, I mean, a lot of people use the term digital transformation and all that, but what is digital growth for you and for BPI?
Well, at the most basic, June, what we try to measure is number and percentage of transactions done digitally. And years ago, that was a very small number. Pre-COVID, that was probably 60 or 70%. And then you had the lockdown. And at one point in the lockdown, the percentage of all our transactions done digitally reached 92%. Okay. Now, when the lockdown was relaxed a little bit, that percentage dropped a little bit to the high 80s. But it's steady at that. And that is, to us, the most basic measure of digitalization. But it is a very basic measure, okay? I think the next order of the day is to try to figure out what percentage of the value of our total transactions happen in digital channels. Because when you look at a lot of high value transactions, they're really done in the branches, okay? So if you look at the value of transactions, non-digital, dependent on the branches, it's still quite high. And that's why I don't see branches going away soon. Now, the name of the game is to try to get those ratios to come together so that the percentage of transactions that are happening digitally in terms of number is also mirrored by the value of transactions happening digitally. And then that's when that's when this gets really exciting. You know? And for that to happen, you have to be able to do some stuff digitally. You have to be able to open accounts digitally. You have to originate loans digitally. You have to do asset management digitally. And that's going to take a while, but that is the next stage.
Right. So that was actually my next question about what else can you do digitally and to enhance the human experience. But before that, since you talked about measures of success or the metrics you look at, you said number of transactions and the value of those transactions as indicators. Would you have a sense of how those two metrics jumped in the periods March, April, May? Is that something you can?
Well, if you look at just a percentage of transactions done digitally, pre-COVID we were 60 or 70%, and then at the height of the lockdown we were 92%. Right? That's huge.
Wow.
That's a huge change. And then when the lockdown restrictions eased a little bit, that percentage dropped down to the mid to high 80s. But it's staying there.
Still strong. Yeah.
It's still strong. Now that is by number of transactions. Now, when does digitalization really begin to pay off? It begins to pay off when the value begins to track the number.
Right.
And that is a function of our offering. That is a function of human behavior. If people can do their asset management business digitally, can you imagine what that will do to value?
Right.
If they can do everything else digitally, can you imagine what that will do to value? So that's kind of the next stage.
Right. So what more can you do digitally to enhance human experience? Customer acquisition. I mean, at the end of your briefing last week, I also remember this. You said that as decent, at the very least, your financial performance was during the period. What you were most excited about was how your digital platform held up when it was needed by customers, and that's a very powerful statement for me. What's the secret to that? I mean, what did you do to? I mean, I've had experience with other banks who will remain nameless that weren't as reliable experience I've had being a customer of BPI. So, to what do you attribute that success? I mean, at least in the short.
Well, it's really years of investment. I remember several years ago, my chairman and I sat down, and we were talking about what do we want to see this bank become, and he actually mentioned two things. He said we want to be more inclusive, and we want to be more digital. And the fact is, by being more digital, we can become more inclusive, right? And so it's been several years of really significant investment in money, in time, in people, to get to this part. And we're just beginning. I remember sitting down with the chairman of BBVA a few years ago.
Yes,
BBVA in Spain. Mon Hoxon, our chief operating officer, and I flew over to meet with him because we really admired what BBVA had done digitally. And he was showing us the metrics by which they did it. And at that point, they were talking about 50% of all the value being generated coming from the digital, coming digitally. And for us, that was aspirational. So we were asking ourselves, can we do it? And we're not there yet, but we're working at it. At it.
So thanks for mentioning BBVA. BBVA, if I understand correctly, is one of the leaders in, like you said, digital banking and the concept of open banking, which is open APIs.
Yeah.
You have any? Is that a strategy you're emulating right now, or you're looking at?
Yes.
I believe it's being adopted in Australia already, open banking. But could you talk a little bit more about that?
Yes. Open banking is a strategy we're working with. We have a lot of APIs. We introduce APIs every few weeks. We're trying to be the platform that a lot of firms use. If we're the platform that everybody's using, then obviously we'll be better off.
Right. I remember I'm not sure if it was the chairman of BBVA or one of the heads of Open Solutions. He was talking about more from a customer acquisition standpoint, because you've passed the test right now that your systems have held up, your banks are operate the mobile, the digital processes seem to be working very well. But is it time to shift into customer acquisition mode again in that space? Because BVA, if I remember correctly, was saying that it allows you to tap channels or engage with partners which are not in your natural ecosystem.
Like I said, the next step is really about simply moving from number of transactions to value of transactions.
Okay.
And the only time you get a real increase in value of transactions is, as you allude to, Jude, if the customer experience is a good one, right? So you can't think about digitalization just in terms of the technology. What I'm learning, listening to my colleagues who know this 1,000 times better than I, is you have to work backwards. You have to think, what's the customer experience going to be like? And then you've got to figure out, okay, what technology makes sense? And then you've got to figure out, what do you have to do with your policies and procedures, right? And how do you have to change them or adopt them? So you kind of work backwards. And that's new for me.
Right.
But I've got colleagues who've done this in other places, and it's great learning.
Hard to talk about digitalization without financial inclusion. How do you see financial inclusion happening over the next 2 years? How crucial is the national ID?
Well, let me start by saying this. In the old days, people talked about financial inclusion more in terms of what percentage of Filipinos are served by the formal banking system, okay? And then a few days ago, I was reading a newspaper article where Governor Diokno was being quoted as talking about financial inclusion, not only in terms of who are being served by the formal banks, but who are being served by the EMIs, right? Electronic money, etc., GCash, etc. And So that's also a form of financial inclusion. And he's right. At the most basic, financial inclusion starts with payments and remittances. Okay? But the real trick for the next stage of financial inclusion has to be lending. Okay? It's one thing to say that you have a financially inclusive system if people have access to payments, remittances through the banks, through EMIs. But ultimately, the real test is what percentage of Filipinos can get credit. That is from the formal system as opposed to informal money lenders or 5-6, etc. That's the next stage.
Thanks, Bong. So, what's final question on digitalization for now? What stage of your digital evolution or your evolution in the digital space are you in right now? And yeah, could you?
I think we're in the first quarter of a 4-quarter game. I think we're in the first quarter. The stuff I'm talking about now, 10 years from now, people are going to look at this interview and say, God, these guys were clueless. So I really think we're the first quarter of a 4-quarter game.
Okay. What's the second quarter look like? I mean, can you give us a sneak peek? What would the second quarter look like then?
An increase in the percentage of our customers that access us digitally. Right now, more than half of our 8 or 9 million customers are enrolled in our digital channels. A great majority of them use us frequently.
Right.
So the next stage is actually trying to increase those percentages. Wouldn't it be great if all our customers accessed us digitally?
Right.
Wouldn't it be great if they used us, if all of them used us frequently?
Yes.
And then you just have to expand the horizon from there. Right.
Are there synergies with GCash?
Sure.
Related company.
Sure. There are synergies. Look, I think it's very exciting for us to see GCash, which is our affiliates offering and our offering right up there in terms of digital usage. I think if you talk about the 3 or 4 names that are right up there in terms of digital usage, GCash and BPI would have to be up there among the top 3 or 4 names.
Right. Okay. 2 last questions, and I think I need to open up to questions from the floor already. So on regulation, how conducive is the environment for financial inclusion and digital innovation? We talked about open banking earlier. How supportive is the regulatory environment? And the bank secrecy law, is that something that is going to come to the fore, or you see that undergoing changes over the next year or so?
Well, June, the late Governor Nesting Espinilla really pushed the entry of EMIs in the country. And the good thing about EMIs coming in and being so good in the payments and remittance space is it forces the banks to step up their game.
Sure.
Okay. It forces the banks to step up their game. And what I see the BSP now doing is it is now trying to balance regulation between banks and EMIs and pushing both. So it's very supportive. What was your second question again?
Oh well, I'll switch then to other topics. So I have a whole range of topics, but I'll limit it to just one last one. What is your ROE trajectory going to be like? At the end of the day, it's ROE, or is it ROA for BPI? I mean, considering interest rates are going to be lower for longer, are you looking at ROE as your main metric for creating, for your KPIs and all that, or is it ROA?
Well, look. Right now with this crisis, ROEs are depressed, right? But our objective is the same. We want to get to ROEs. We want to get our ROEs back to the mid-teens. It might take a couple of years, but that remains our trajectory. one thing I've looked at that excites me is I look at the journey DBS took. You know, with DBS was probably the first big Asian bank to push digitalization.
Right.
And at first their ROEs were not helped, right? But after a while, their ROEs began to go up, and right now their ROEs are looking pretty good. So you've got to keep the faith, right? You've got to keep the faith.
Do you have a target for ROE for 3 years down the road?
I'd like us to be at least 15%.
15%. Okay, thank you. So we will open up to questions from the floor. Let's see. What's your view on the property sector? Mortgages and all that. Is that something that is becoming an area of concern or excitement for you?
Well, I think the low interest rates will support the property sector for a while. The real issue I have is what happens to the POGOs, because they're 10% or 20% of all the office space. But I think low interest rates are supportive in general.
Okay. What is the role? This is something I wanted to ask earlier, but I just went with the flow. What is the role of leadership in times of crisis?
What is the role of leadership? Holding it together.
Holding the space.
Holding it together and frankly, making sure that everybody is taking the next step, putting one foot in front of the other. Because the temptation in a crisis like this, and it's such a unique crisis, right? The temptation in a crisis like this is to withdraw, is to shy away, is to back down and inertia. And what you have to do is you have to take a deep breath, and then you have to decide, I'm going to wake up in the morning, I'm going to put on my clothes, I'm going to go to the office, and I'm going to put one foot in front of the other. Because we all have to do it, right? So it's simply that.
Thank you, Bong. A question on ESG. Is ESG core to your running the business? And I understand that you have a strong expertise in sustainable finance. What do you think are the opportunities in sustainable finance?
Well, ESG is so critical now, and I think it has to be a balancing factor to what happened after the global financial crisis, June. Because remember, the response of the global financial crisis was for central banks around the world to lower interest rates. And the moment they did that, people with assets saw their wealth grow, and people without assets didn't catch up, right? So the demographics, the global demographics really changed, right? There was greater income inequality because of low interest rates. So I look at ESG as trying to redress that, right? Clearly, the economic system working by itself has probably increased the rate of inequality, and ESG, I think, is meant at redressing some or all of that, and that's why it's important.
Thanks, Bong. There's a question from Omar Cruz on digital transformation. I think we've addressed that a little bit, but what's the capex for the digital transformation?
Well, I'll tell you what our tech spend is 7 or 8% of all our revenues. It's about 15% of all our OPEX. And if you were to divide our tech spend between BAU, between running the bank and building the bank, it's probably 50-50.
Okay, thank you. A friend of ours, PJ Garcia, is asking about BPI and M&A opportunities. BPI has grown inorganically via M&A when the banking sector then saw consolidation in the sector. Fewer but bigger banks to be more competitive vis-a-vis regional ASEAN banks. Will BPI be the first mover in M&A?
I don't know. All I can say is, remember the Asian financial crisis. The two big M&A transactions that basically helped define the industry today happened then, right? Equitable PCI, which helps form the core of BDO, and then BPI Far East Bank. So, I don't know what's going to happen here, but I would expect a crisis like this. Eventually, there will be transactions. I don't know whether BPI is in a position to do any of them, but, we'll see.
Right. There's an interesting question on dollar remittances slowing down substantially. Will this have an impact on the value of our currency, inflation, and sovereign debt?
Well, right now, what we're seeing is the slowdown in imports has outpaced the slowdown in inward remittances, and so the peso has actually strengthened, right?
Right.
I wouldn't mind seeing the peso weaken a little bit if it's a result of more import activity because the economy is growing.
Okay. I think Philip and Mike want to ask the last question, but before that, I'll do a little bit of integration. Maybe we'll end with Mike, but just want to say this has been quite an interesting conversation. It's like a time machine we went on. I don't know if you guys felt that way. We started out in the 70s, 60s, 80s basketball, and now we're talking about the future of banking. We're talking about mega trends. Thank you very much, Bong. I think Mike, would you like to ask a question? I think I need to unmute.
Yeah.
Hi, Mike.
Hi, Bong. How are you? Thank you very much for coming on our webinar. You're the second senior executive from the Ayala Group. PG was here a few weeks back. And so I want to thank you again for doing this. I usually ask...
The second Consing also, Mike.
The second Consing, yeah. Joel was here as well. I usually ask a question either on investments or management as a closing question. If you don't mind, I'll ask you both, Bong. So first of all, on your own investments, I see a painting behind you which looks like a mahilom. I'm not sure, but do you consider art as an investment for yourself, or is it more of a thing you just like to collect?
Well, I'm in the office, Mike, so I take no credit for what's behind me. I collected art, a little bit of art when I was a lot younger. My wife and I did. But by the time 2000, 2004 came along, it just became too expensive. And so I decided, forget it. I couldn't keep up. There was just no way. And so it was some time in my youth, but I've given up on it. It's the prices have run away from me.
And it's always hard to sell, I guess. So I guess the more important question, and sticking to June's theme of basketball or basketball teams, but staying away from the UAAP because we're on opposite sides of the fence there. But maybe as the leader of a major bank that competes in the top level, I mean, I don't know if you came across as the Last Dance series.
Sure.
The Chicago. Everybody wants to be like the Chicago Bulls, right? And you're there as Phil Jackson or a Jerry Krause in your team. What's the kind of thinking you have, philosophy in trying to build that kind of a team, for BPI?
Well, I had the pleasure of watching Michael Jordan play in Chicago years ago.
Wow.
And he was phenomenal, but that's not the team we're trying to build here, right? Because basically you had Michael Jordan, and he accounted for maybe 80% of the payroll, and everybody else, right? The team I admire is the old Celtics when Russell was the player coach, right? And you had Nelson coming off the bench. You had Larry Siegfried, you had Havlicek, right? You had Jones. That's the team that you want to build, right? The team with balance, a team with complementary skills, a team with mutual respect, and a player coach.
Great. Go Irish. Phil, are you going to ask anything?
I think
I'm not sure.
having issues with the signal.
Feels good. Well, again, thanks a lot, Bong, for being with us today, and hope to have you back again sometime in the future. Thank you.
Good seeing you guys.
Thank you so much, Bong.
Thanks, June, Mike.
See you at the games.
Yep, I hope so.
Whenever that will be.
I hope so.
We'll see Mike across the arena.
I know. I hope so. Sige. Thanks.
Cheers.
Bye-bye. Have a great weekend.
You too.
And thank you everyone for joining us.